Right lads, special one today. I had a phenomenal week and I'm going to be walking you guys through how I made 13k in just one trade. I'm going to be walking you through the thesis, the risk management, the strategy, and basically taking you guys on a journey how you guys can also replicate this. Right lads, no nonsense today. No nonsense today. So for this one, we're going back into a trade that I took on the Wednesday of this week. And I just want to show you guys from the 1 hour what I was looking at. So essentially I'm seeing the range in here. I'm seeing this range right here, right? And I see that this 10 o'clock candle marks the Asian high, and I see that the 6 o'clock candle marks the Asian low. So I'm like, cool. So I'm waiting for either one to get swept in the London session. So I see that sell side gets taken out for sell side liquidity. So that gets swept to the downside with this 1 p.m. candle. 1 a.m. candle here, sorry. And now that that's been swept, what we want to do is, the idea was we want to look for a market structure shift, right? But it has to make sense, right? So two things have to happen. Liquidity needs to be taken, but then also it needs to line up with a high time frame PDA. So are there any immediate high time frame PDAs? No. So what do? We know that the market operates in market maker buy and sell models. So we can look actually further along on the price chart to see where our discount PDAs are. And it was actually like all the way over here in this bullish order block over here, right? No, I believe it was this one actually. It was this one. That bullish order block over there on the 4 hour is where it tapped into. I have to really squint the screen so I can actually show you guys, but bear with me for a second. Yeah, so you see this wick right here, this wick right here, this green wick where I'm lined up, this is exactly where the market structure shift occurs. Why? Because we tapped in to a discount PDA over here in the form of a bullish order block in here, on all the way on the other side. And yes, it does exactly work like that. Price remembers when price changes state. Because remember, what is an order block? Majority of people don't know what an order block is. An order block is simply a change of state in price delivery, right? A change of state in price delivery. Over here, within this region of price, the last place that price changed its state from bearish to bullishness was over here in the form of this bullish order block. So price came, tapped into this bullish order block over here, and then that's when we went and looked for our M1 market structure shift. So this is when we started looking for our market structure shift. So I knew that we took out sell side on the Asian range. So now I know that I have my liquidity has been taken. It's tapped into a discount PD array, right? Or for SMC traders, you guys know it as an area of demand. And now we know that we're just looking on the lower time frames for our market structure shift, right? And that's when we were down here and price was coming in, you know, made this swing high up here, came down, formed our institutional swing points. I've been talking a lot about institutional swing points, but it's very important that you guys note this. It formed our institutional swing points, right? Where we see a lower low in respect to this price leg, then we see an even lower low. So we see a move upwards, followed by a run on liquidity, and that is a breaker swing, right? Now, what we see is price coming up. This candle is very important. This candle is the one that breaks structure. So this is the one where we're looking for the fair value gap to form, and it forms with this candle, this subsequent candle. And now that we have our fair value gap, it's as simple as we're going to wait for the closure of the fair value gap. I usually like to go with the closure, but the thing is, everything was happening so fast that I was just like, okay, cool, boom. Right? So I took it in the fair value gap still, but it wasn't at the closure, right? And we took this and we went long, targeting the Asian high, right? Noting what time we got tagged in, 2:19, right? That lines up with when the protraction usually happens, right? From around 12 to 2, or maybe just after 2, right? It happened, the protraction here happened from 12 to 2, and then we got our market structure shift just after 2, right? And that's when we started making the actual true range of the day, going high in London, taking out the Asian high, right? So all in all, this was a very, very simple trade, but this is something that occurs over and over and over again. And if you guys can just follow that one blueprint, looking at the Asian range, make sure it consolidates nicely, identify the low, identify the high, right? Wait for one to get taken. Does it tap into a higher time frame PDA? Yes. Okay, cool. Where's the market structure shift? Where's the fair value gap? Okay, place a stop below the low of the candle, or above the high of the candle if we're going short of the candle that broke structure. Very simple. Very, very simple stuff. This is not amazing. I want you to know that all of you guys should be able to do this. All of you guys should be able to do this. Now, what was my profit taking strategy here? I decided to take 50% off at 1 to 3. First of all, I ended up risking 0.9% instead of 1%, which was weird because I was thinking in my head, okay, I have a 2 pip stop loss, so I know that the lot size is going to be 50 lots. So I put on 50 lots initially, and with Alpha Capital Group, you can only add another position once it starts running in profits. So my second position, I realized, but it's a 1.6 pip stop loss. So I calculated 0.5% for 1.6, which was 62.5 lots. So I had a 62.5 lot position and a 50 lot position. And that's where I took 50% off of each one at 1 to 3. And then I let the next ones run fully to TP. Why? I'll tell you why. Because the reason why I let it run to TP is because Asian high getting taken happens, it's inevitable. On the day Asian low will get swept, Asian high will likely be swept as well, right? So that's inevitable. But why did I hold it? Well, I held it because this retracement didn't bother me. I viewed it as rebalancing. In fact, I was going to give it all the way to down here to rebalance and push up, but it didn't come all the way down. It pushed up, right? Also, I considered time of day. Now, what was the time of day? From 2:19 when we got tagged into the trade, all the way to 2:53, right? Now I know that the New York the retracement that forms the higher low in London, right? As we can see here, this is the higher low in this region right here. This is the retracement before New York, right here. We can see it, right? As we know that forms from 4 to 6. I promise you, it forms between the hours of 4 a.m. New York time to 6 a.m. New York time. Back test it if you don't believe me. 4 a.m. to 6 a.m. That's when it will form. That's when this retracement will start. So I'm looking, right, and I'm saying, should I hold it so it can hit Asian high? Yes, I should. Why? Because we haven't hit the 4 o'clock hour yet. In fact, we haven't even hit the 3 o'clock hour yet. So I was comfortable holding this to full TP. And that's literally how I made, risking 0.9%, taking profits, taking half off at 1 to 3, and then letting the rest run for 12.5R, right? And that's how I made 13 grand in a trade on a 200k account. It's that simple. It's that simple. Are you going to tell me that you guys can't do this? Of course you can. Of course you can. Back test it. and get back to me.
Right, lads, I know you guys noticed that this was more of like a simple video, a very, very simple, straightforward video. And the reason I did that deliberately, the reason why is because I want you guys to know that trading is straightforward. It is very, very straightforward. The thing that people get tripped up on, right, is their psychology, is the fact that they don't pay attention to the nuances within the market, right? And on this channel, that's exactly what I am here to break down for you guys. I'm not here to break down technicals. You guys have enough people trying to teach you strategy, right? Psychology and the nuances are the things that I want to basically get down for you guys, because that's what's going to take myself to the next level, first and foremost, and it's also going to help you guys as well. Because those of you who have mentors, you know that you get taught your strategy, you get told about your risk management, you get told about your psychology, but nobody talks about the nuances, right? When to trade, when not to trade, when to manage when and how to manage your trade, and when to enter, when not to enter, what's happening in terms of the news release, etc. But on this channel, that's what we're here to talk about. But I hope you guys enjoyed, and I hope this video broadened your horizons for what you can do in your trading. Until next time, ready.